even though demand may not recover quickly, the production shut-ins we're going to see in the next few weeks are going to create a lasting supply destruction. When you shut in productive capacity, it's hard to bring back online. And so even though demand won't fully normalize, neither will supply. And so you still get, without being very aggressive on a demand expectation, a tightening of fundamentals and a recovery in prices in the second half of this year.
Damien, I wanted to get an insight from you on the likely producer response and the policy response as well. You pointed out floating storage. It's reported there's about 150 million barrels of oil at sea today. 1 in every 10 supertankers is now being used as a floating oil storage facility. What probability does Goldman Sachs put on foreign oil import tariffs in the United States? Is that something that we can see in the future?
It's hard to have a scientific estimate on that. It is a potential policy response to try to prevent too much oil coming into the United States. So it's conceivable the U.S. administration has discussed it. But importantly, whether it's such a tariff, whether it's domestic quotas on production in the U.S., putting those in place is still too little too late, just like the OPEC cut. Right, the pace of inventory build that we see right now in the U.S. alone will start to test storage capacity in 2 weeks. Right, the next meeting, for example, of the Texas Railroad Commission to discuss production quotas is not until May 5th, 2 weeks from now. So you pretty much see how there's an inevitable outcome here, which is, you are testing that storage capacity, and you need to see a producer response, mainly through low prices at this point.
And oil still at multi-decade lows. What's the house view on where things move from here? How do you see prices evolving medium to long term?
Sure. So, we think that this is the inflection phase, right? Over the next several weeks, because of the binding constraint on storage, big adjustments will be forced. Once it becomes apparent that the supply side is converging down to the demand level, you should expect the first recovery in prices, right? It's not a meaningful one, but it's kind of a relief rally to know that we're finally sorting this unprecedented surplus. We think that happens probably in June, July. After that, the second phase of the recovery, the one that takes us, from, call it $25 back to 40, and by end of 21, $60, is all about the inventory overhang, right? It's about reducing that record amount of crude in storage. And it will take time, but as demand gradually recovers, as some productive capacity has been lost due to shut-ins, and as OPEC probably doesn't renormalize production right away, we think that plays out through 21. Our Brent forecast for the fourth quarter of 21 is $60. That's when you finally have normalized that inventory overhang.